Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Tuesday, August 9th, 2022. We've got some red on the equity land and the futures. I think the Dow just tried to be a little bit green for a minute, but it feels like a red day maybe in the offing. Energy land and agricultural land, however, futures are looking green. There was some news that a pipeline that Russia supplies oil to European customers had to be shut down or what have you. I don't know. It wasn't nat gas, so it was oil. But gold back up over 1800 this morning. Still like that space. On the energy patch, if you're looking for new longs, I do think the E&P space does look interesting. I do continue to think nat gas has the most sort of legs, if you will. Names that we are long are AR and Chesapeake, CHK. Also looking at FANG, F-A-N-G, Diamondback Resources. Those are three really good names in the E&P space. And then in terms of the pullback, we've been talking about the possibility of a pullback in the market the last few days. It looks like, the technical work that I do, that I subscribe to and I look at, is calling for a pullback starting essentially yesterday. We've had 2 down days in a row in the S&P, very mild ones. But we could pull back here a little bit, very possible. 3,900 looks like a reasonable level for that pullback to kind of reach to. That wouldn't surprise me at all. We got CPI coming out tomorrow. We'll see what happens there. But we've had a pretty good move to the upside, so it wouldn't some kind of backing and filling going sideways to down a little bit would make sense. Micron lowering the bar on their current quarter. They're down 4% pre-market. That follows NVIDIA yesterday on their pre-announcement, so the semis are starting to do their thing in terms of pre-announce. This does make sense. This does go according to the playbook. When you talk about recession and things of that nature, they're usually one of the first sectors to show that stress. So that's a no-touch area for us. We do own a little bit of AMD. We do own some Qualcomm. And we do own some NVIDIA, but we took that down big previously. So we will be once again adding to NVIDIA at some point. Not yet. We'll probably take a look at Marvell, Wolf, the old Cree, as well as On Semi. And then we'll probably look at some semi-capital names like KLA. But again, not yet. We're going to let this ride itself out. It could be a couple quarters of this kind of a thing. So that may be more of an addition this fall, kind of October, maybe even November timeframe. We'll see though. The cool thing about semis though, they tend to run their cycles quick. They get all the bad stuff over. So that will be, I think, a constructive area for new money before this year is out. Also taking a look at housing space, tech, TECK. These guys make the decking components. They are lowering the second half of this year by a pretty good amount for back half of 2022 on their earnings call. So housing is another no-touch area for us. I'd like to see those levels much lower, like a DR Horton. I want to see that below 1 times tangible book. It is not there. One area that we do continue to like on the long side is med devices. We've talked about this before, the idea that you're going to have less people with on the ICU taking up beds that are COVID patients, more elective surgeries, more things of that nature can occur. So we like that whole space. They also are not part of the anti-inflation bill that's going after trying to open up Medicare drug price negotiations for a lot of companies. So that doesn't even seem like a big deal for the farmers, but it's a non-event for med device. It's not even part of the bill. So they're not part of that nonsense. And IHI is a ticker that we own, like that. I'm still looking for, we did buy some Intuitive Surgical. I'm looking for other names to kind of round out that exposure. We're kicking the tires on Stryker. So like the IHI, looks like it might be a little bit of a pullback today, so it could be a good entry point. That's all I got. Have an awesome day. And again, don't go crazy. We could have a little bit of a pullback here. Would not be unhealthy, would not be unexpected. And that's it. Coming back to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.